One same-day options position shaped Thursday's midday rise. But the real bars show the move did not last through the afternoon. 10,000 short calls sat at cash 7,730. Price crossed that strike near midday, the position was closed, and the index reached its high at 115. Then price dropped about 31 index points into 3 o'clock before recovering. This is the AlgoIndex market close for Thursday, August 27th. The cash index finished at 7,730.99, up 0.72% and back above its 20-day line. The index spread tells the first story. The Nasdaq 100 gained 1.43%, roughly twice the S&P's 0.72%, while the Dow added only 0.20%. Technology carried the advance. The fear gauge closed at 14.50, down 4.73%, and its own volatility measure eased to 82.90. The close was firm, but the work was concentrated in a small group of very large technology names, rather than evenly distributed across the market. The catalyst arrived after Wednesday's close. A dominant artificial intelligence chip company reported results and an outlook above expectations. Semiconductor shares gained about 3% as a group, while several software names also jumped after their own reports. Dealer positioning helped keep the cash range controlled. Call gamma stood near positive $4.5 billion against put gamma near negative $2 billion. With dealers net long gamma, hedging tends to lean against price movement, which can pull the index back toward concentrated levels, even when the headline index is rising. The verified 5-minute bars correct the shape of the session. The first cash bar opens near 7,710. The index reached the day's low at 7,689.89 by 9:40, then climbed in steps to 7,741.27 at 1:15. What followed was not a gentle fade. Price fell to roughly 7,710 by 3 o'clock, a drop of about 31 market points from the high, then recovered 20 points into the official close at 7,730.99. The entire session stayed above the cash volatility inflection at 7,675. The smallest verified cushion above that level was about 15 points. The options flow split cleanly by instrument. Single stock dealer hedging flow across index members reached positive $5.5 billion of market delta, its strongest reading in 30 sessions. About $4.6 billion was concentrated in longer-dated calls tied to the dominant chip name. Index-level hedging flow was different, net negative $1.3 billion on an up day, built from both call buying and put buying, with more than half in same-day expirations. That mix reads as a purchase of movement in the index, while the directional view was expressed through one large technology name. The 10,000 lot short call at 7,730 was closed, so that midday source of demand does not reload for Friday. Friday's one-day implied move was 0.62%, about 48 market points. That sits below the 9-day average daily range of 52.19 and 29% below the 14-day average true range of 67.08. 1-month implied volatility closed at 11.70%, below realized volatility of 12.12. The implied volatility rank was 6.7%, and the yearly percentile was 4. In plain language, movement was priced near the low end of its yearly range, ahead of a scheduled 10 o'clock event stack. The process lesson is about the session shape, not a return tally. The market began under a range-damping structure, accelerated as the midday options position was closed, reversed sharply into 3 o'clock, and then recovered into the bell. That sequence argues for updating the day type as the bars change, instead of carrying one label from the open through the close. All exposure was closed before the end of the session, and nothing was held overnight. Friday's first decision shelf is cash 7,722, where the 20-day reference and the first computed pivot meet. Holding above it keeps the dense positioning band towards 7,752 in view. Losing it opens the 7,700 pin, where several support calculations converge. The larger risk arrives at 10 o'clock Eastern Time, when a policy symposium speaker, the preliminary benchmark payrolls revision, and the final sentiment reading are scheduled together. The payroll estimate is positive 157,000 against the prior benchmark restatement of negative 911,000. Because the releases share a timestamp, The first reaction may be difficult to attribute. The levels for Friday are on the record before the session begins: 7,722, 7,700, 7,675, and 7,631. See the complete graded history at algoindex.com/tools/gamma-level-accuracy. Thursday closed firm, but the verified bars show a midday high, a sharp reversal, and a recovery, rather than one uninterrupted afternoon lift. Friday's next answer arrives at 10 o'clock Eastern Time.